Welcome to Economic Outlook. Today, we're diving into the second quarter of 2025, a period marked by significant economic uncertainty. The main drivers? Shifting tariff policies and stubborn inflation. Let's start with global growth. Forecasts point to a slowdown. Those new tariffs, especially from the US, are making businesses hesitant to invest and consumers wary of spending. US GDP growth is now expected to be around 1.2% to 1.9% in 2025, a noticeable drop. Some analysts even see US quarterly growth dipping to 1.6% by year-end. The Eurozone isn't faring much better, with growth around 0.9% to 1.0%, while China might stabilize near 4.5%. Now, let's talk inflation. Tariffs act like a tax on imports, pushing up costs for everyone. This is making already sticky inflation even worse. In the US, inflation could hover near 3.0% in 2025. If tariffs get more aggressive, core inflation might even approach or exceed 4%. This is a headache for central banks, potentially limiting their ability to cut interest rates. These tariffs are also shaking up global trade and supply chains. We're talking a baseline 10% tariff on many US imports, and much higher rates on goods from places like China. Think effective rates of 30% or even higher in some cases, leading to retaliatory measures. Businesses are now scrambling to rethink their supply chains, looking for new suppliers, and even considering moving production. This hits industries like automotive, electronics, and fashion hard. Emerging markets are also on edge, worried about less investment. What about jobs? The economic slowdown is expected to nudge the US unemployment rate higher, possibly to 4.6% by mid-2026. Consumer confidence has taken a hit, and businesses, especially small ones, are cautious about hiring and investing, citing trade policies and inflation as major concerns. This puts central banks like the Federal Reserve in a tight spot. Rising inflation from tariffs might mean keeping interest rates high, but slowing growth could call for rate cuts. Current bets are on maybe just 1/4 point rate cut in the US in 2025. With the year-end rate possibly around 4.00% to 4.25%. Regionally, the US faces slower growth and persistent inflation. Emerging markets are vulnerable to trade protectionism. The Eurozone sees modest growth, but tariffs will likely slow things down in 2025, though increased investment, including defense spending, could drive growth in subsequent years. China's growth seems stable, but US tariffs are a big risk. Looking ahead, how trade policies evolve and whether inflation sticks around will be crucial. Businesses need to stay agile and manage their supply chain risks. The threat of more tariffs and escalating trade tensions is a major concern for the global economy. While some hope a recession can be avoided if tariff money is reinvested, the overall mood is one of caution.